Today is Monday, November 17th, 2025. It is Monday. I did not take a trade, but the reason I am recording this is because I want to show what a literal A+ setup looks like if we were to get it, and you're going to see what I mean. But I thought this would be important because this is like what happened today. There was a trade that was textbook if the close was good, but we're going to go through that. Coming into the day, let's see. We could have gone either way. We obviously hit this low, significant. Let's go on the 1 hour. Clear swing low with the 1 hour gap. Ideally, what would have happened? Well, there's two things. One, I think we were either gonna pump up to go back down, or we were just gonna pump down and try to get some kind of reversal, maybe on this 1 hour gap or this hourly low. We could have gone either way, but I want to talk about, there's a 1 hour gap right here. Technically what you're seeing, this candle hasn't happened yet. Let me make this a little better. This is like what it looks like before market. Actually 1 hour more. So we have this 1 hour here, but I'm marking this one out because this is the one that actually matters, and you're going to see why, but this one was marked out for me. This 1 hour up here was actually a 30-minute gap, and it was also a 15-minute gap. That inherently will make it a lot better and a lot stronger, because if we actually reject off of this level, it means that like on all three key higher time frames, we clearly see that we're gonna, like, if we reject off this level, we're rejecting off of it on 3 different time frames, and that makes it a lot stronger. But I want to get into, like, basically this is like the mech model. Like, this is like almost a perfect example. I am nowhere near open. What time is this at? 9:20. Okay. Market opens, end up pumping hard, right? Remember, external liquidity, 1 hour gaps, 30-minute gaps, 15-minute gaps. There's no 4 hour gap here. There were like these swing highs above it, which we also could have been drawing to, but we're clearly going up, clearly bullish, right? Pumping. As we're pumping, we create a 15-minute gap right here, right? So what does this mean? Hitting a key time frame, a higher time frame, external liquidity, which is 1 hour gaps, or let's say 15-minute gaps, 30-minute gaps, 1 hour gaps, 1 hour swing highs, right? Those things are external liquidities, and when we hit external and we reject, we want to go to internal liquidity, right? So pumping, we hit, and you could see, if we go on the 5-minute, there's a beautiful 5-minute gap right here, right? On top of this, if we check ES, there's a clear SMT. I can even show when my, oh wait, this doesn't have replay, but never mind. You can see at this time, 6:30, we have a clear SMT, 6:30, right? This is literally as A+ as you could get. Why? Why is this A+? Well, we're going to see that the most tragic thing happens here. But why is this A+? One, we have a clear 5-minute gap, right? And when we're thinking about inversing fair value gaps, we talk about it has to be 5-minute or lower. This is so good because, one, we have an SMT, which shows that with an SMT, since NQ hit higher or swept the high and ES did not, that's a sign that we're going to reverse, that we're going to go the other way. Why else do we think we're reversing? Well, we're hitting a 1 hour gap, we're hitting a 30-minute gap, we're hitting a 15-minute gap, and we're clearly, on the 5-minute chart, we're clearly getting reversal. You see on a candle, we hit it, create a gap, and we instantly start reversing, right? Now, that's great if we start reversing, but what is it going to tell us that, like, where are we going with the reverse? Well, we have an unfilled 15-minute gap down below, right? It has not been tapped into once it was created. That is such a strong draw on liquidity, That's our internal liquidity, right? We hit external, we're going to go to internal. And finally, with this gap, if it closed, it was like 0.25 of a tick off. I guess a little bit more, but my gosh, this was literally less than a tick away, which is insane. Less than a tick away from closing, right? But if this closes, we have a 5-minute inverse, which also tells us we're going down, and we have a clear target. Now, I think the only question that could be, or like to people that are trying to understand the MEC model is, you could ask where's the internal liquidity, like your manipulation leg. That's manipulation legs, I would say, are way more important when you're on the 1-minute or 2-minute or 3-minute chart. But since we're on the 5-minute chart and we have such a clear reversal, if this closed, even though there's no like, resweep of the high and come back down, if this closed, I am so confident that we're going to this 15-minute just because we have an SMT, we're clearly rejecting, we would have had a nice V shape into the inverse, that it would have been perfect. Like there would be no reason for us not to get here, that we wouldn't need the manipulation leg because we're already just shooting for it. Like there's just so much confidence into it. Now, if this didn't inverse, or which it didn't obviously, and we actually if we came back up to resweep highs, that would just make the trade even better to then take it lower. But you could see we don't even inverse it and we just kill it. Like this would have been a beautiful, I mean, if it ended up inversing, you could just take it 45 points. But I thought it was important to show this just because, like, if this inversed, this is literally like A+. This is what you want to be taking 10 out of 10 times. You are going to win like 7 or 8 out of the 10 times. It was a trade that, I mean, I wasn't even going to trade today. No news Monday, I came in like, I'm not trading. And I saw this and I was like, if this inverses, I'm getting it. But it didn't end up inversing. But I thought it was important to show that, like, I don't know, I posted 2 losses already. And people might be like, how do you actually like trade this model? I think this is a clear example of like what you're looking for.